I want to take a little bit of time now to talk about, kind of the top three positions or three of the larger positions in Compound Kings. And two of them we'll cover are very different from obviously what we talked about last year. One of them is the same, and that's Meta. Talk a little bit about, I guess one of the questions I wanted to ask, you kind of alluded to it a little bit more from the human angle of comparing and contrasting Meta to Snap. But I guess I'd be curious, to get your take on one. Do you think they're making the right decision in investing in the metaverse? I know that that's a hot topic at the moment, and there's a very wide range of opinions on, is this going to work out? They're investing an enormous amount. But, one, why is that still a position? And then how do you think of Meta's business for looking forward from here and kind of the metaverse element of it?
Sure. I'm going to explain for a second why I'm so excited about the business, and then I'll get into some of the thoughts on the metaverse side of it. We talked a little bit about source documents earlier. And in 2018, during one of the congressional testimonies on Meta, there was this great exhibit that was included. And it forced Meta to show the relative size of each of their four platforms, WhatsApp and Instagram and Messenger and Facebook, in the top 30 developed countries or something like that. And what was fascinating is that in any given country, a different one of the four products might have been, the number one leader. And there were a lot of really cool insights in the report that you got to see about how Instagram was just growing so fast everywhere. It wasn't necessarily cannibalizing Facebook's lead. In some markets, WhatsApp was the dominant leader. It had to do with if it was a market where the iPhone wasn't the de facto leader, that meant WhatsApp is the de facto messaging product. And when you see a business laid out on a piece of paper like that, you realize how much more complex it is than any individual to attempt to understand all by themselves. And that likely speaks to the scale of Meta being larger than I believe a lot of investors give it credit for. And to be blunt, or to make a blunt comparison, AT&T was a very big piece of the S&P 500 for very many years, and they ran into regulation. They got broken up and they got put back together. And, they've actually been a decent investment throughout a lot of that. And you could almost think through Meta as the modern communications platform, but it's global. It's less regulated, but that's growing over time, and it's got an incredibly stronger business model because they're not charging fixed price subscriptions. They're able to price discriminate because they sell advertising to all these small business advertisers. Now, that business model runs into more problems because it can be politically influenced, or you can have bad actors that imagine back in the day at AT&T and someone could call you and drop a bunch of misinformation in your ear through your phone. You can understand why that communications company got regulated so quickly. So there's trade-offs to that structure. But I think Meta is a much more complex business than any investor that says, "Gosh, they're growing slower." And in fact, for all the fears about TikTok, one of the things that we really closely track is we look at the top 100 accounts on Instagram. We look at their followers and their engagement, and the follower growth on Instagram is continuing to exceed the follower growth on TikTok if you were to look at the same 100 accounts over on TikTok. So for all of TikTok's successes, which have absolutely been worthy of kind of notice and study, Meta is still, in fact, growing from the position that they're in as big as they are. Now, to address this metaverse issue, which is an issue, the part of the history of it has been that Facebook was worked through so many transitions, desktop to mobile, photos to video, and they're trying to get ahead of whatever the next transition is. And this is where I think a lot of healthy debate deserves to be had around the company, because Mark has made the decision that it's worth allocating at least 12 or $13 billion of capital into annually to get ahead of, because they view themselves as competing against Apple long-term on this, or Microsoft long-term on this, and they think that's the volume of capital required to be competitive. Now, the challenge is you look at, say, a Roblox, which is the most realized version of a metaverse company today, and it's a $30 billion market cap company. So what's Meta going to do? Spend the entire market cap of the metaverse in the next 4 years chasing the metaverse. So I do think there's a lot of reasonable debate that can be made about whether or not the company is investing in a high return on capital way with it. It's something we're staying really close to. You're looking at less than, say, 5% of their market cap over the next few years. They are diligent enough in the remainder of their capital allocation as it comes to their share count, as it comes to their hiring growth. Their core business is still driving great engagement in ARPUs. So taking the whole picture together, we're excited about the long-term opportunity without having to be excited about the metaverse turning into anything.